Hello. In this video, I will show you the very important things in the trading through analysis methods. This is technical analysis and fundamental analysis. Here is the two main analysis methods in the trading in the finance markets. So let's see. The first things I will compare together for you to understand very quickly, because this is a cost for the new traders to learn more about Forex. So I don't want to complicate you. So let's see. The first things is the meaning. Technical analysis, or you also call like the TA. It means that you're only using the chart pattern, the trend to define the price futures, the future price. Only using the chart, no use anymore. And about fundamental analysis, meaning you using the basic fact, basic report, political report, economy report, macroeconomy to analyze the value of assets, the exchange value to define the future price. Therefore, technical analysis can use in the very short-term investment or the scalping or the swing. So most traders using technical analysis because this is easier to analyze, and when for the people come from other majors to the market. Fundamental analysis most used in the long-term investment, like investing is higher than 6 months, normally uses. For example, if you want to invest in the Amazon stock, Apple stock, you need to understand about the Amazon, about the CEO of Amazon, about the income of Amazon, everything related to the Amazon. This is a fundamental analysis. As some trader no uses, some trader just opens Amazon's price chart to analyze. This is a buy entry, this is a sell entry. So they entry and take profits, just like this. So, the objects of the technical analysis is the right time to entry and exit. Meanwhile, the fundamental analysis just used to identify the exchange value of the assets of the stock. Therefore, the technical analysis using the data from the charts, while the fundamental analysis using the data from the report, the political, the news, everything was published during the month, during a week, or during years. So let's talk about the technical analysis first. How they can analyze the chart, the price only using the chart. So let's see. Here is a price chart. You can see something on the TV, on the internet, on the news, everything. They use this chart to analyze, to find out the buy or the sell signals on this chart. Normally, we have 4 analysis methods in technical analysis. The first things is a trend, support and resistance, price pattern, and technical indicators. I will detail one by one for you to understand it very carefully. About the trend, in the technical analysis, we have 2 types of trend. Uptrend, when you have a series of higher high and a higher low. The downtrend, when you have a series of lower low and the low high continuously. Sideways means that when you have the high and the low equal together, no sharp difference between the high and the low. Or you also gesture it is a sideways because it cannot create the structure like the uptrend or the downtrend. That's all. And some traders, they draw in the line. I call it like trend line. It connects from the low to the low and the high to the high, like this, like you can see on my screen. When the price go to this line and they buy, and when the price break this line, when price break this line, it means that now the trend line is a change, so they can sell. Just theory. I will detail it in the next course because this course is very basically, no need to understand more. Just need to remember what we have in the technical analysis. Back to my course, back to my lessons. Another technical analysis method is the support and resistance. When they draw in the line above and below, we can have 2 lines like this. The first one is above, we can call it the resistance. Below, they can call it like support. Why it called like this? Because when price go to the support, it means that price gets the support from the buyer and price can go up again. And when price go to the resistance or the higher line, it means that they get the resistance from seller, then price go down again. You also understand like most of the seller focus or waiting to sell on this resistance, and most of the buyer focus or waiting for buy at this support. Therefore, price go from the upper to the lower to the lower to the upper like this. It also most trader trading during the range like this. They waiting for buy here and take profit over here, sell over here and take profit at there. But some trader waiting for a breakout because resistance is a mode of seller, support is a mode of buyer. When the price break out above, it means that the buyer is a winner and the seller now is a loser. It means that the buyer is stronger than the seller, so they can buy when the price break out a resistance. Inversely, you also sell when the price break out from spot. This is theory. It cannot bring you into a successful system because you cannot have a beautiful place to take your stop loss, to take care of our positions. This is theory. Next one, price pattern. You can see on the support and resistance, the line is horizontal, but when the price creates a shape like this, go from the lower to the higher and go to the lower and higher, but it cannot create the structure like the uptrend or the downtrend, but the range, but the low and the high, very tight from the left side to the right side. That creates the three triangles like this. It means that price is have no more the people wanted to buy or sell like this. So it just needs one very small buyer or seller power to break out this line. It means that this is a signal to buy or sell. For example, if price break out to the upper line like this, it means that you can buy. You can buy this time. And here is FLUC. FLUC also the same theory with the resistance and support. When the price break out, you can buy or sell like this. Break out on the upper is a buy. Break out lower is a sell. Some models new buyer focus on it, but you no need to use any technical analysis like this one because it cannot bring you into profitable traders. You just need to understand to see the structure in the market. And here's a rectangle, and you can see it's same as the theory on support and resistance. And next one is more difficult structures. Head and shoulder. Head and shoulder show you that price still in the uptrend, thus create the higher high and the lower. Now it just create the equal, now the next lower. So it means that price also create the range or the sideways. When price break out the recent low, it means that the price now is the downtrend, so you can sell in here. True price pattern is quite complicated. You must see on the stock market. On the FOREX market or the cryptocurrency is have no more the price pattern like this. And cup and hands is very popular price pattern. The theory of this price pattern is the seller is put the price go down very strongly, but at this time, what is the buyer waiting for buy over here and they push price, holding on in the range like this. And when the buyer come to stronger, they push price go to the previous low, previous high, and that's a signal waiting for buy when price break out this black line. And here is also the technical analysis methods some traders use, and you can see that these methods most used by drawing line. It means that some trader can draw in at this level, some trader can draw in higher, lower, and in the middle. Every trader can draw in the typical line. It means that everything is not combination, it's not same. So some other trader using another method, they calculate some average price and the deviation price to see the trend and to see the momentum of the market, and waiting for buy and sell signals that call like the indicators. And very popular indicator is the moving average. Moving average is a trending indicator. It means that moving average calculate the price over the periods. That period you can see it. You can change it or from 9 periods or 9 or 10 or 12, everything. when price break out lower the moving average is a red line. It means that you can sell, and when breakouts again you can buy. You can see here is when price break out is upper, but price break out lower immediately after they break out again. It means that a lot of the fluctuation in this market, so using the moving average is quite have a bit risky when you're using it. And the next indicators is a MACD. MACD also same theory with the moving average. They have the two line of moving average, the fast line and the low line, and they calculate the deviation between two lines like the histogram. When histogram is strong, it means the trend also strong. But when the histogram is very weak like this, it means that price now is in sideways. And when the fast moving average crossed above the lower moving average, and the histogram also change from the red color to the green color, it means you can buy or sell like this, or the trend now is changes. And the next one is a Bollinger Band. Bollinger Band just calculate the deviation between the price. And you can see here, here's a range of price. And when price is go very closely to one band, it means that strong trend. And when the price go between the Bollinger Bands, it means that price now is in its range. Just as theory, you just need to know there are some indicators you can use in this market. And how to analyze the market, I will teach you very carefully, so no need to understand or no need to remember everything in this course, just for reference, for your knowledge. And next one is ISI. ISI just calculates the momentum of the price over the period you can see it. And for example, here is a 100 line, and here is 0 line. When price go to the above line, it means that very strong buy trend at this time. And when the price go to the lower, it means very strong buy seller at this time. You can refer some indicator when you're sitting on the chart. So I will teach you very carefully on the practice lesson. This is just theory. Totally, you no need to remember anything here, just to understand it. How many is the methods on the market? Just 4: trend, support and resistance, price pattern, technical indicator, just like this. And about fundamental analysis. Fundamental analysis, I say that just using the political, the economy, the social factors relate to the assets to analyze the future price. And also on the first market, there are some basic news you need to care about it. The first thing is the interest rate decisions, retail sales, inflation, unemployment, industrial production, business sentiment surveys, customer confidence surveys, trade balance, manufacturing sector surveys. Ninth report is very important. And now I will show you how you can find it on the internet. So let's see. Here's Google. So let's type investing.com calendar. Like this, enter. So you can see here the second line, investing.com calendar. So here is what you want to looking for. So you can sign in your account here to save your seating. I want to introduce to you about this website. Investing.com will provide you a lot of news, not only related to the first market, also related to stock market, cryptocurrency. But in this video, I just show you about the first market news. And you can see here is a economic calendars. And on the first tab, here is the economic calendars, and here is the times for the news. Here is the news for which dollars, for which currency. The first thing is the US dollar, New Zealand dollars, and Canadian dollars. So you can select which currency you want to follow the news. Normally I trading on the major pair and some cross pair. So normally I will follow Australia, Eurozone, calendar, France, New Zealand, Japan, United Kingdom, US. Yeah, so this one, at this time you can set as default Yeah, and here is important. 2-star is quite important, and 3-star is very important, and so you can apply it. And then you can see our result here. And the first thing here is a date, and here's date news. API weekly crude oil stock, trade balance. Here is some of the quite important news, and here is very important news. And here is actual data, and here's the forecast, and here's previous. Normally, some of the news will be forecast before they publish, so we need to compare the actual and the forecast. If the actual is higher than the forecast, it means that it's a bad news for your currency, or I can say that your currency will increase. In contrast, if the actual is lower than forecast, it means that it's bad news for your currency, and the market will go down. You can click on this news, and read more. And here is a summarization of previous news, and here's actual and forecast. And here is a note from the investing for you. Bullish mean that increase, bullish mean increase, and bearish mean decrease. Yeah, that's all for the news. And now I will show you how these news impact on your price market in very short term. So let's see. We have the two important news. The first news on the 1915 related to the US dollar is a very important news. You can see 3-star ADP non-farm employment. This means that the four news in my chart. And here's the actual, and here is the forecast. The actual lower than forecast. It means that it's a bad thing for the news. But depend on the news. Unemployment. If the lower unemployment is a good thing, and the higher unemployment is bad thing. So depend on you. You can click on the news to read which one is better, which one is good. So let's see on the actual chart. And the second news is the 21st and 13th. So let's see what happened with our price. Very strong go down. You can see very strong go down. I can delete this one for you to easier to follow. Very strong, very strong. You can see here. Oh, very massively. And when's right now? Oh, very strong. You can see, and from this one to this one, is it 42 pips, only 50 minutes. And let's see the news on the 2013. The market go up again, Due to price also go very strong at previous news, and at this time have no more power to go strongly like this. But price also have a fluctuation very strong. If you entry at this time on lower frame like the 5-minute chart, you can fail. If you have more experience in this market, maybe the 4, 5, or 6, 7 years, you can earn money from this news. But you are new traders, please skip it. Don't trade anything on the news. And totally, after this lesson, you just need to understand something. The first, TA or technical analysis, using the chart to analyze and find out where the best place to buy, where the best place to sell, or take profits, stop loss positions. And they normally using in the scalping, in the swing, in the short-term investment, and FA fundamental analysis, using the news, political report, and using in the long-term investment. But most traders using the FA. After they can select the better assets to invest, they still need using the TA to find out where they can buy in the market. And therefore, TA is very, very neat to learning in your trading career. And the third thing you need to remember, don't trade when the new published time. That's all for this lesson today. Thank you very much. And see you next lesson.